Hi everyone, so let's now take a look at this component 3 promotion and finance for enterprise paper for the BTEC level 2 in enterprise. So this is a paper from Feb 2019 there. So there it is. Right, let's get moving on this. Now, here's our case study material, and let's just zoom in a little on that. There we go. Okay, so we've got Jasmeena Singh, who operates an enterprise that provides gardening services to homeowners. So immediately you can think about geographic segmentation here. In the early stage for her enterprise, she worked in the local area cutting lawns and maintaining flowers and trees for an additional payment. She would plant flowers and shrubs and give advice to clients about the type of flowers to buy for their gardens. Okay, great stuff. Jasmeena's enterprise has been successful, and she has employed another person to help her. It's increased her revenues and profits to finance the growth of her enterprise. Some friends invested in it, and as a result the enterprise became a private limited company. So this simply means that as a private limited company, that friends and family can then invest in it and put money into it and become shareholders. Now it's limited because if I don't know, if she happened to have someone get hurt as a result of her work with a branch landing on someone, well, it would be the company that would be sued. It wouldn't be her. So from an investor's point of view, it means your liability is limited because you can only lose what you put into it. Okay, so that's significant. Jasmeena believes she could further expand the enterprise by doing gardening work for local businesses. Research suggests that many businesses need gardening work. So now we're getting into some B2B aspects that she could actually be involved in. Alright, so clearly we've got the sort of geographic segmentation, we've got some B2C work, and we've got some B2B work there as well. Jasmeena wants you to help with the promotion and financial management of the enterprise. Okay, jolly good. Right, let's move it on then. Let's have a look at what we've got here for activity 1. So now, as JSG Limited grows, Jasmeena needs to understand the flow of financial documents used with her suppliers. Following diagram shows the order in which documents are sent and received. Each arrow shows who sends the document and who receives it. Okay, complete the diagram by writing the name of the missing documents in boxes 3, 5 and 6. Now of course make sure you have a go at these questions as we're running through them, so try and complete this on your own, and now I'm just going to crack on and get this done. So box number 3, this is where the invoice is then provided. So we've got the purchase, the delivery note, it's then handed out by the gardening supplier, and the invoice will be accompanied by that delivery note. Then we've got payment going back. We would then, of course, have a receipt come through, and finally we would have a statement of account. So a statement of account would actually then just illustrate what position the account is in and how much is owed. Okay, that the balance has been cleared and so on. So there we go, great stuff. Let's have a look at what we've got here. JSG Limited will have a variety of costs. One such cost would be the monthly mobile telephone bill. Okay, state which method of payment would be the most efficient for paying this. Well, it's not going to be cash, it's not going to be a check. Like, the easiest way to actually pay these bills is via things like direct debits. Now, they just allow the payment to change. So if the phone bill is particularly high, given a certain month and lower the next, then that direct debit will of course change, unlike with, say, a standing order, and it means you don't have to do anything. Okay, state why the chosen method would be the most efficient. Okay, well, it simply requires that Jasmeena sets it up, and thereafter it is an automatic payment. Okay, so we can actually just highlight the fact that this is an automatic payment that would just go through, and she wouldn't even have to do anything. Okay, so very efficient. Right, lovely. So once again, have a go at pausing this and cracking on with the questions here. Right, so Jasmina wants to improve the way she controls her spending. Okay, fine. State the formula used to calculate the total cost. So the way in which you calculate total cost, well, there's a variety of ways that you could actually state here. I mean, most commonly you simply put fixed cost plus variable cost, okay? But you've got to also remember, and you get a mark for that, but you've got to also remember that it's also like fixed cost plus the total variable cost, okay? And you could literally just put either of those answers, or you could write them out in full and you get a mark there, okay? Right, so using the data to calculate the total costs for the year for JSG Limited. Okay, fine. So let's have a look at what we've got. We've got £3,700 of fixed costs, and then the variable cost is £10. But remember, when it comes to this total variable cost, it is the variable cost times the quantity that is sold, okay, or the quantity of jobs is clearly 540 times 10. So that's therefore going to equal 5,400, and then we've got 3,700. So overall, what can we see? Well, we can see that we end up with 11 and finally £9,100. Okay, so that works very nicely. Make sure you put the answer down in this little area down here, and that just signifies to the examiner that you have got everything in the right place, okay, and that's your final answer. So the way in which the mark scheme would break down here, given that you can see you get 2 marks here, that you'd get a mark for getting this one right, and then you'd get a mark for getting this one right, okay? So if you only got as far as that, you'd get 1 mark, okay, but then you get the second mark for your final answer. Well, you get 2 marks here. Okay, but if you only just included that and didn't go any further, you'd still pick up a mark anyway. Right, jolly good. So, next up, activity 2. Jasmina has sent you the following email. Hello, can you place the following order with Easy Save? Okay, so 12 boxes of poppy seeds, alright, lovely, and 6 boxes of daffodil bulbs, alright, lovely. Okay, so let's have a little look at this. Right, here's a price list, right, jolly nice, so that's all fine. Let's just see how this information is actually going to look when we input this here then. I just want to get both of these pages on the screen at the same time, so you can have a little go at this. So let's just zoom out a little. There we go. Right, okay, so there's our purchase order form, and there's where we've got to actually input some of this data, okay. Right, so we can see that this first one, we got the pounds and the pence there, and the fact that there's 12 of them, so we can see £40 and 40p multiplied by 12 equals this, okay. So it's actually laying out that information quite nicely for us, and then we've got a number of boxes here, 6 times that's £64.50. Okay, well that's all right. Okay, and so we can now actually think about putting in the price for the daffodils, and how much does this come to? Well, you do the maths here, it comes to £387. Okay, all right, let's get rid of that so we can zoom back in. Now that's £387, and let's just take a better look at this. All right, nice one. Right, so we got £387 subtotal. So that's where you just add these two together, of course. Okay, so we can see that we've got 80, we've got 871. Okay, all right, so 871.80, and then we've got a 5% discount. So if you think about how this would break down, if this was a 10% discount, well, it'd be £87.18p. So it's going to be half of that. Okay, so half of that is going to be what, 43.59. So we've got to take that off. That is a negative now because a discount is being offered. So that would mean we're left with 828.21. Okay, jolly good. Right, let's move it through to our next question. So Jasmina has been checking the financial performance of the business for the last year. She wants you to calculate her gross profit. So we can see we've got turnover and we've got cost of sales. Well, this is nice and straightforward because all we've got to do is subtract that from our turnover there, okay? And turnover minus cost of sales, well, that would give us £24,817, okay? So lovely stuff. Right, next question. Explain one way Jasmina could improve her gross profit. So how could she actually do this? Well, ultimately it's about reducing this cost of sales. Now this cost of sales, remember, is a direct cost, so it's directly involved in production. So it's things like we were just looking at, daffodil bulbs and things like that. So she could find cheaper suppliers. Okay, so find cheaper suppliers. All right, lovely. And then we could just make sure that we actually expand on that. So we've identified our point, and then we could say that this would leads to lower cost of sales. Okay, so there's therefore a lower cost of sales. Now, that will mean that revenue per unit will actually be cheaper. Now you could alternatively say that the variable costs there are lower, which they certainly are as well, and that would work as well. So it could be that you actually want to increase advertising, promotion, or maybe you could even recommend increasing the price if she's finding that she can't keep up with demand. That could be another way to go. Okay, great stuff. Now let's move it on. So now we're on to 2D. Jasmina wants to know how well her enterprise has been performing. She's identified the following problem in her previous year's financial statement. So we've got retained profit, which has decreased. So it was in 2016 4,284, and now we've got 1,378. Okay, so explain 2 actions Jasmina could take to improve the enterprise's retained profit. Right, so what can we actually do here? Really, we want to focus on something which is going to enable her to improve that net profit in particular. So it could be that she tries to actually reduce her expenses. Okay, so she could actually reduce her expenses. That would work. So let's pop that down. Reduce expenses. Okay. So that's a potential option. Now, why would reducing expenses help? Well, it would mean that net profit would be higher. Okay, so net profit would be higher. And that would work. Right, now what else could we also say? Well, we could also say about paying less dividends perhaps, or that she could actually take less money out of the business for her own pocket. So yeah, 2 options there. Reduce owner withdrawals, that's one, or alternatively, and you don't need to do both, don't do 2, you've only got 2, provide 2 actions. I've provided 1, so reduce owner withdrawals, that would work very nicely. Okay, so the alternative here is, just for a bit of revision, is that you could reduce dividends. Do you remember we saw it was a private limited company, and shareholders are entitled to a share of the profits. That share of the profits is handed out as dividends. So either of those points would work very nicely, and then you could then say, right, well, this would increase amount of money, amount of profit retained. Okay, fine. Lovely stuff. Right. Alright, so let's move it on, see what we've got next. So Jasmina believes carrying out targeted advertising would help inform potential business customers about her services. She asks your advice about the two basic aspects of advertising. So the basic aspects are message and medium. Okay, right, so we're on to activity 3 now. So first up, when it comes to the message, well, this is about what you are trying to say to potential customers. Okay, so what the communication actually needs to focus on saying. Okay, so what the communication needs to say. All right. And then we've got the medium. Well, the medium is the choice of advertising or promotional method that you actually choose to use. Okay, and of course that could be print, that could be digital. Okay, so really this is just about how to get the message across, or the method used, how to get the message across. Okay, so how to get the message across, or how you will actually carry out that promotional material, and what sort of methods you'll use. All right, lovely stuff. So let's move it on. Now we've got Jasmina wants to know if she has enough cash to increase her promotional budget to help her enterprise grow. All right, lovely. Let's just get all of that in shot there. Okay, so of course pause it, have a little crack at this, see how you get on. Now she has started to complete cash flow statement for the past year. Complete the cash flow statements. We can see that we've got 1, 2, 3, 4, 5, 6 different points here. Okay, so you know, a decent amount of marks on this question, so we don't want to be giving away easy marks. Okay, so what we can see here is that we've got money coming in, money going out. We've got total inflow. Oh no, not money going out, rather. We've got the cash inflows here. Make sure you read it carefully. And we can see that's 1,400 plus something equals the total. Okay, so what's the difference? Well, of course, that's going to be 700. So 2,100. And then we don't know what this figure is, but it does tell us our net cash flow. Now remember, the net cash flow is just inflows minus the outflows. Okay, so it's the inflow minus this equals this. So 2,100 minus something equals 800. So, well, what could that be? It's got to be minus like 1,300. Okay, so when you subtract 1,300, sorry, that's not a minus. We just put that down as 1,300, but we would subtract it here, thus giving 800. The opening balance is 300. So now we've got to do, to get this closing balance, we've got to go the opening balance plus the net cash flow, plus or minus the net cash flow. In this case it's positive. 800 plus 300 equals, yeah, there we go. Okay, 1,100. Right, lovely. So let's now move it along. So now we've got to work out the net cash flow. We've got the inflows. Now we've got the outflows here. And so this 1,800 minus this 1,200 is of course going to give us 600. Okay, lovely stuff. And then we're up here, so we've got the total amount, and we know this is 400. So what's this one going to be? Well, of course that is going to be 1,100. And we know the opening balance. Well, the opening balance, look at this, right? The opening balance becomes is the closing balance from the previous month. Okay, so you reach right at the end of the month, and at the first of the month at midnight, that becomes the opening balance. So it's got to be the closing balance of the previous month. So we got 1,700. All right, lovely stuff. Right, let's see what we've got next. So activity 4. Let's just zoom out a little bit there. Now with this one here, before offering gardening services to new business customers, Jasmina would need to update her gardening equipment. She's also aware that business customers would expect to pay their invoices 30 days after the work is completed. Okay, so she has created a cash flow forecast to see if this will create any cash flow problems in the future. Okay, fine. That's all right. We've got that information. So this is a forecast now. She's just completed this statement. So now we're going to have some more detailed information to put down about this. Right, so what can we say? What can we highlight? Let's get both these bits of paper in shot here so that we can just draw attention to what we're talking about. Right. Okay, hopefully you can see both of those okay. So Jasmina has forecast that the enterprise would have a negative closing balance in each month. Well, we can see that here, okay? Those negative amounts, 9,150, 10,490, yeah, and so on, okay? So those are negative. Two solutions that would improve the negative closing balance, okay? Right, well, if you can boost your cash inflows, that's going to be good news, okay? So if she can generate more sales, then that's going to be good news. If she can reduce her outflows, that's going to be good news. There are, of course, alternative ways that she could go around this as well. Okay, so let's have a little look at this. Right, so she could increase inflows. Well, that's struggling to write that. So we've got increase inflows, fine. This will ensure she covers outflows, fine. Right. What else could she also do here? Well, let's have a look at some of the detail here, because it's nice to actually use some of this information. If she's got a big purchase, which she clearly has, is there a chance she could spread that out over the course of 12 months maybe? Maybe she can reach some sort of agreement where she pays it £3,000 a month or so, and that would really help. That would really help to improve her finances, no end there. So let's put that down, okay? So spread purchase, new equipment purchase over 3 months. So that would really help her situation, okay? This will mean, well, what will it mean? Okay, it will essentially mean she has lower monthly outflows. But is of course covering and a lower monthly outflow than this. Look at that, 17,250. Okay, has lower monthly outflows than the 17,250. Okay, so that would work out well. She could also apply for a higher purchase on that agreement, okay, and that would work quite nicely. I don't think I've explained this second point brilliantly there, okay, but nevertheless, you know, I think that would be absolutely fine. What else could she do? Well, does she have a old piece of equipment that she could actually sell? That would help boost her inflows. That would be another option, wouldn't it? Okay, good stuff. Let's move along then. Let's get rid of this page, get that out of the way, and see what we've got in store next. Okay, so Jasmine is worrying about paying her debts in the future. She recognises the liquid capital ratio is an important measure of her ability to pay her debts. So we've got the liquid capital ratio, current assets minus inventory, current liabilities. Here's our inventory, here's our current liabilities, here's our current assets. Okay, so remember how this goes. Like here you can see the current assets total is 3,850. Okay, 3,850. Inventory 2,500. And current liabilities 1,500. Alright, great stuff. Okay, so what does this mean when we actually subtract that from there and so on? Well, we end up with a ratio where we end up with, what, 0.9 to 1? Okay, so 0.9 to 1. So this basically tells us that her current assets are 90, well, she has 90p of current assets for every pound of current liabilities, of course. All right, good. Now, on our next one here, we can see that we've got the fact that she's calculated the profits of the year for her expanded business. So this is what she's actually looking at. Calculate the net profit margin. So notice how it gives us these calculations. So you just need the ability to actually input that correct information. So we've got 16,440 divided by that revenue of 120,000. All right, so calculate that, and then we've got to multiply that by 100. Okay, and so what do we end up with there? Well, we end up with 13.7%. And what does that tell us overall? Well, it tells us for every pound of sales, she retains 13.7p as net profit. Okay, fine. All right, nice one. Blank page. And oh, look at this, right, we've got a bit of break even to do, don't we? Love a bit of break even. I know my group certainly love it to pieces. So let's see what we've got going on here. I just want to get all of that in shot. Jasmina wants to calculate the number of domestic customers jobs that she needs to take on to break even. She gives you the following information about these. Okay, right, well, isn't that good of her? Okay, so we can see our fixed costs now. Using the data above and the following blank chart, you should draw and label the fixed costs, total costs, and revenue. So notice it's fixed costs, total costs, revenue. You don't need to worry about variable costs. Okay, so we can see the fixed cost doesn't change. Okay, and would literally go, and of course you want to use a ruler doing this. All right, like so. So that's our fixed cost, and then we can label that. And then we've got to actually put in our break-even point. Now we can identify where we're going to break even. So let's have a little look at that. And how are we going to do that? Well, we're going to notice that the actual average revenue, 6,000, is going to equal the total cost of 6,000. And what level of output is that under? Well, that's under 200 units of output there. Okay, so at 200, that is where we're going to break even, and it's going to be at 6,000. all right, so yeah, jolly good. Now we can then see, and I'm just going to do this roughly, okay, that we're up to sort of 12,000 there for the average revenue. Okay, by the time we get to 400 customers, and then when it comes to the total costs, we're at 8,000, which is right about there. Okay, jolly good. So this just enables you to then literally get your ruler, and from there just run straight across and plot these points out nice and accurately. Okay, as I'm beautifully doing here. Okay, so we got our total cost and we got our total revenue. We've got our break-even point. Okay, and good out. This is looking all right. Okay, so now you've got to make sure that, just coming back to this very quickly, that your total revenue, okay, must complete up here. Okay, your total cost here, your fixed cost must be consistent throughout, and your break-even point should be highlighted as well, and I didn't do that there, so make sure you highlight each of those points. Okay, and that is looking jolly good. Right, okay, now let's move it on. So by completing the break-even chart, Jasmina is now able to calculate her margin of safety. So calculate the margin of safety if Jasmina has 375 domestic customers. So notice we got 375 back here. We said the break-even point was at 200 units, so we can see 375 is going to be here-ish. Okay, so therefore we're going to say this difference is our margin of safety, of course. Okay, so that is the difference. So what is that difference? Well, clearly it's 175. Okay, so we got 175. That's fine. Now you might want to actually show the figures there. Okay, that we know that break-even point is 200. That's 375. But if you've got the final answer, that's absolutely great. Okay, so now statewide knowing the margin of safety would be important for JSG. Okay, so well, it can reduce the chance of loss. Okay, so it can reduce the chance or the risk of loss. So isn't that good? All right, jolly good. And that can also just help make sure that the business is likely to survive. Okay, so that's a really important point. So the stronger the break-even point, the better off, the more financially healthy the business will be. And now we're on to activity 5.